Hello, I'm Marty Martin, and I work at Equus Wealth Management in the city of Chicago. What we're going to talk about today is taxes. I know what some of you are thinking is, please, let's not talk about taxes. I'm not so excited about talking about taxes myself, to be honest, but I want to go over a couple things that have changed. One thing that's changed that you probably noticed was when you looked at your paycheck in January of 2013. So you looked at it and you said, hey, something's off. Maybe you pulled out a calculator to double check. You said, wait a minute, there's less money. And in fact, for most of us, in fact, for all of us that earn income, there was less money. But how could that be? Remember the payroll tax? So what happened this year is we're paying 6.2% for 2013, whereas in 2012 we paid 4.2%. Let me double check to make sure that's correct. That is correct. So it went up from 4.2% in 2012 to 6.2% in 2013. So that's the bad news. So the bad news is you may actually have less money in your paycheck. But here's the good news. It's not as if that money is just being given away. That money is being set aside for you when it comes to retirement, or God forbid if you happen to become disabled. So I'm not even going to go into the whole doomsayer thing about will Social Security be around or not. But that money is being set aside. So next time you look at your paycheck and you say, something must be wrong, well, I don't know if it's wrong or not, but more money is being taken out of your check because of the payroll tax. So that's one big change that impacts anybody who earns an income. What's another big change? Now, another big change is all of us, when we file our taxes, we try to deduct. And deductions are good because you make so much money, then you want to deduct or subtract from that, so that way you decrease the amount of taxes that you have to pay. So we're searching for deductions. So each one of us gets a deduction just for being, right? So you get the standard deduction for individuals, and you get the standard deduction for married filing jointly. So here's some good news. The deductions went up. So I'm going to have to take a look at this just to be precise. So in 2012, the standard deduction was $5,950. That went up in 2013 to $6,100. Not a lot, but enough. And for married filing jointly, the standard deduction in 2012 was $11,900. It's gone up to 2013 to $12,200. So first I had a little bit of bad news around the payroll tax. Then a little bit of good news as it relates to the deduction. This next piece that I'm going to talk about is about health reform. And I'm not going to call it anything other than what it is, just health reform. This only applies, what I'm about to say, to certain individuals. So if you're an individual making more than $200,000, or if you are a couple filing jointly making more than $250,000, pay attention to this percentage. You're going to have a new tax imposed upon you that will be 3.8%. So don't stress unless you're making more than $200,000 as an individual or more than $250,000 as a couple filing jointly. So those are the three major changes as it relates to taxes for this year. But I think I want to really conclude by focusing on not kind of little minute changes or maybe even big changes, but really focus on the importance of looking at your taxes from a broader perspective, and that broader perspective is retirement. So I would highly encourage you to put away as much money as possible for your retirement. It's your retirement after all. So that way you can set yourself up for financial success and maybe not to have to work as long. If you're fortunate enough to have your employer provide a 401k or a 403b or just simply a retirement plan, in many cases what your employer will do is they'll give you a certain amount of money. I would strongly encourage you to use that money because it's free money. And not only is it free money, you can also take that and use a deduction as well. So really invest in your own retirement. So I think for our discussion today, talking about taxes and retirement, I think it's best to keep it brief. So again, payroll tax went up 4.2 to 6.2%. Deductions also went up, which is good for you. And you only have to pay attention to the 3.8% tax, which is a new tax, if you what? Make more than $200,000 as an individual and more than $250,000 as a couple. Thank you so much, and I'll be back to see you shortly. Bye-bye.